It's 3:03. I want to welcome everyone, all the brokers around the state of Louisiana. We want to thank you for what you do every day, whether you're a managing broker, broker owner, or whatever other capacity that you serve in as a broker. You might even practice, but Louisiana Realtors truly appreciate your efforts, your leadership, and your support to make the real estate industry even better. And we want to be your partner in that success to provide you with the program services and tools that you need to enhance your company, make more money, and for your agents as well to be more successful. I'd like to thank our leadership team, Cindy Dyer, Rhonda Reed-Curiel, Ginger Malden, and incoming Secretary Treasurer David Favre, and our entire executive committee. They're really geared into being able to help the brokers, provide them the tools and services, and put more resources behind helping brokers succeed in, as you know, today's ever-changing landscape of real estate. Also want to thank, I don't know if he's on, Jim Cady, who was our broker involvement leader this year at the NAR and the state level. And Carrie Coffin, broker from Alexandria, will be coming in that position for 2025. So I want to thank them for their leadership. As you know, this is the fourth installment. We do 4 a year of the broker Zooms, broker calls, trying to bring together presenters and speakers that can provide you with up-to-date information on key real estate topics. So we're gonna start with our first speaker, and if you have a question, certainly you can unmute at the end of the presentation or go into your screen on your computer and type in the question, and we will be more than happy to try to answer that question. If we can't answer it, we'll get somebody that can and get that back to all of you, in the next day or two. So without further ado, I'm happy to introduce Summer Mire, the Executive Director of the Louisiana Real Estate Commission. Summer's done a fantastic job over the last several years as she stepped into this role as the Executive Director. They have a great commission, a great staff. They work extremely hard on behalf of all the licensees in the state. And I've asked her to come on and update you on all things Louisiana Real Estate Commission. And as you know, renewals a big time a year right now, and wanted to walk you through all of that and also some other happenings that they may be working on that you need to know from the Louisiana Real Estate Commission. So welcome, Summer, and we're glad to have you on today.
Thank you, Norman. I appreciate it. I appreciate Louisiana Realtors giving me the opportunity to kind of give a few updates and kind of where we are right now. As Norman stated, we are in the home stretch of our renewal season. We basically have just a few weeks left as Christmas nears and the end of the year nears. So I wanted to give an update on our renewal numbers and kind of where we are. We have about 86% of our total active licensees renewed right now. So we are about 90% of our active brokers have renewed. The corporation licenses are at about 85%. Our associate brokers are around 92%, and our salespersons are around 85%. Our inactive licensee count has gone down a bit. We are only at 67% renewed for those. So we are really trying to get the message out to all licensees. We do those emails with the registered email address that you have registered in your portal. We did also recently send out some actual hard copy postcard renewal reminders to those that have not renewed as well. So we're really trying to get that message out. You should be seeing more emails in your inboxes for those that haven't renewed, and also CE renewal reminders as well. We do ask that all of the brokers go into your portals, look at your licensee list, find out who has not renewed as of yet so that you can get that message out to them as well. You need to remember that if their license expires, those licensees will have to start over as a new licensee. And then as your role as a broker, if their license has renewed and they are still doing active business, you can be held responsible if you do make any payments to them for business that is done while their licenses are not renewed. So it's very, very important that you take an active role and look into your licensees to make sure that that renewal is complete. As far as your broker, if any of you have a corporate license, you want to make sure that that is also renewed as well. A lot of times our brokers will go renew their personal broker's license and then forget about that corporate license. So please make sure that you're logging into that portal. It is going to be a separate portal or a separate user ID and password. So you do want to make sure that you go in and renew that also. Education reminders. You may have renewed your license by now, but you need to remember that all continuing education is due by December 31st. Really want to make sure that you're not caught up in any of our CE audits. So please go in. You can actually go in and check your licensees' education transcripts as well. So if you're having any staff meetings coming up in the next few weeks, please put out that reminder that, hey, CE, that needs to be completed by December 31st. The current mandatory course this year is the mandated forms and hot topics course. And then the one for 2025 will be the navigating the new normal, which is your buyer agreements and licensee duties, which has been that Lynn Madison helped us put together. So that's a great class. We're looking forward to that in 2025. But we do have that mandated forms and hot topics for 2024 that needs to be completed. As far as Jeff said, you can renew your education transcripts. If you have any new licensees in your office, this is important. We do have a lot of new licensees that have been licensed towards the end of the year. Those licensees are not having to pay any delinquent renewal fees, but they do have to renew that license. So if someone started in November of, say, this year, they still need to go in and renew that license before the end of the year by December 31st. They are also required to complete that 12 hours of CE. So they will need to have the mandatory course as well as the 8 hours of electives. So a lot of them don't understand that. They think, oh, I took my 90-hour pre-licensing course, I'm good. But they're not. They do need to have that 12 hours of CE completed as well. We do have a number of licensees that are have blocked renewals currently. If you were caught up in a CE audit because you didn't complete your CE in 2023, we do have a number of licensees that have not satisfied that education case. So if they go in to look in their portal and you see that there is any kind of flag on their license, they need to contact our compliance department to get that cleared. They will have to pay their fine. If they owe a fine, they will also need to complete any of the education that is on file that they may not have completed. A lot of times I'm getting calls on or emails on Christmas Eve or New Year's Eve while the office is closed and they're wanting their licenses all of a sudden back up and running and open for renewal. Staff's not here in the office. We need to try to get that completed prior to December 31st, please. If there's any questions, they can contact our compliance division. They are always here to answer calls, and they are able to pull up case histories to kind of find out what's going on with that and what their case matter may be. A couple of things that we've had that I've seen an uptick for, well, I guess first, do I have any questions about the license renewal process, or if anyone has any questions or concerns about that I can answer? I can't see on the chat, so, or I'm not seeing anything.
Lori, would you alert us if there's a question in the chat? But certainly if you want to unmute and ask a question, feel free to do it that way as well.
Yeah, there's no questions in the chat.
Okay, thank you. We have seen an uptick. I'm just going to talk about some of our case compliance right now. We have seen an uptick lately in property management complaints. We often have licensees that are salespersons that are doing property management without the knowledge of their sponsoring broker. They're often running their sales or their property management through their own personal accounts, and they're not going through the broker's rental trust accounts and security trust accounts. So if you can get that message out to your licensees or any of your sponsored licensees, let them know if anyone plans on doing property management, that does have to go through the sponsoring broker. We get a lot of questions about that. We get questions from brokers saying, well, that's not something I want to do. So can my licensee do it on the side by themselves? No, unfortunately, they cannot. It does always have to go through the sponsoring broker as a salesperson if they're wanting to practice property management. So we do have, like I said, we do have a number of complaints on that right now. So if you ever have any questions, again, please contact our compliance division. They'd be happy to answer any questions on how to get this account set up, and what you would need to do to be in compliance for those matters. Let me see, let me make sure I didn't miss anything here. Oh, really quick, back onto renewals. We do have a number of licensees that have gone in, they've completed their payment for the renewal, but let's say that they have an independent errors and omissions form that they're missing. They might think that their license renewal is complete, but if you go log into your portal, you'll see that they may have an error code. We really need those licensees to contact us because their license renewal is not complete. It might be missing a fee that they forgot to pay. They may have submitted the incorrect form, incorrect renewal form, or an incorrect form for their errors and omissions insurance. So if they see those error codes, we really need to try to get those cleared. That way that they're free to operate with their license. So please, again, I know I keep harping on it, but whenever you have these meetings with your licensees, if you please let them know, log into your portal, make sure that your license renewals are clear and that there aren't any issues with that license, because we do have a number that do have error codes still on their licenses. I
Um,
think I saw a question.
yeah, Summer, when new licensees finish their 45, and I'm assuming that's post-licensing hours,
Hmm.
does that count towards that, the 8 hours for that completion of those credits under post-licensing?
It does in the year that they take it. So as long as they take it in the year 2024, it's going to count. They may not be, it may not be due until 2025 for them if they get their license, let's say in November. So it's always in the year that you complete the hours. But it will count, but they would still be required to take that 4-hour mandatory as well. Any other questions on that?
And review the fine schedule again. I know after September 30th, it started, just so they'll have that going through December 31st.
So through December 31st, currently we are, so at this point now we are at the $200 delinquent renewal period. So if you're coming to renew your license right now, you are paying the $200 delinquent renewal period on top, or delinquent renewal fee on top of your actual renewal as well. Again, December 31st, that license expires. You're going to have to, if their license expires, they will have to, the 90-hour certificate that we have on file will still be fine. They won't have to retake the 90 hours, but you do have to take that real estate exam again. So that's obviously a big task for some people to have to do. So we want to make sure that those licenses are getting renewed. We've also been trying to push or to let people know that if you're not sure what you want to do with your license, there is the option to go into the inactive status for the following year when you renew. You have to do the paper renewal. There's a box that you check off that basically says, I want to renew my license in the inactive status. If you do that, the education is not required until the time that you decide to go back active with your license. So that is an option. Obviously, we're not we don't want everyone to go inactive. But if some people are not quite sure if they want to stay in the business or not, that is an option that they have to be able to go inactive during the renewal period. It won't make them inactive the day that they sign the form. It goes inactive for January 1. So they could finish out any deals that they were doing, for the remainder of this year. So there is that option as well.
And Summer, no changes. Are there any major changes or anything with the errors and omission coverage that you all provide as an option that obviously if they go through you all and purchase the E&O coverage?
Right. No, there's no changes. We're still in the same policy that we have with Rice. We do that every 5 years. We'll go out for bid on that. I believe we have 2 more years left, I think, at least on this current bid. So unless there's any changes with the insurance company, we're still with that same policy that we have. So no changes there.
And in next year, the year that we get together with the commissioners as well as the industry and start looking at changes potentially to the sales contract, residential, as well as the property condition disclosure. Is that correct?
That's correct. Yes, we do that every 2 years. Our current forms chairman or chairwoman is Commissioner D. Halfin. So we will put out some emails along in conjunction with Louisiana Realtors that basically says if you have any ideas, if you have any comments or concerns or anything that you would like to see changed on the form, we usually have those sent both to Louisiana Realtors and to the commission as well. We'll compile all that information for our meetings, but that will be, yes, that will be in 2025.
And the new changes, so would take effect January 1st of 2026.
That's correct.
Based on the work group findings and then ultimately the commission voting those changes into those 2 forms that are one mandated and the other mandated to sellers.
That's correct. Yes. Just a couple reminders, we are closed on Christmas Eve and Christmas Day, and New Year's Eve and New Year's Day as well. Those are governor mandated holidays for all state employees. So we will be putting those messages out, but I just want to make everyone aware that is the last day of the year, obviously New Year's Eve, but we are closed that day. So just wanted to make everyone aware of that. Those are the main topics that I have. I'd be happy to answer any other questions if anyone has anything specific.
Does anybody? There's not a bad question. So we have Summer here. She can answer anything in all Louisiana Real Estate Commission.
We do have a new website. We launched that about a month ago at this point now. I think the website is much more user friendly. I feel like you can get to forms that you need with one click instead of having to click 7 different places first. So if you've not been to the website, please go check it out, kind of dig around. Click on the different links. If you have any comments or concerns, you can send it to info@lrec.gov. We're happy to take any constructive criticism that you may have. If anything you think is easier to get to or that you would like to see on the website. My IT director, Jeremy, is great at making those changes. So we happy to hear anything that you might have on that. But it's much more user-friendly than it was before. So we're very, very pleased with the website.
And what's the email? I think Jamie asked, what's the email for suggestions?
So it's info, I-N-F-O, at LREC.gov. So info@LREC.gov. And I'm not sure if, Laura, you could type that in there if I need to. I might be able to. Let me see.
We'll try to get it up. And for those, if you're ever in the Baton Rouge area, I know for those out of the Baton Rouge, the commission meets the third Thursday of every month. I think y'all start at 10 o'clock, correct?
We start at 10 o'clock. Meetings are open to the public, so please feel free to join. You're always welcome. We do have a public comment period if you have anything that you would like to address with the commission. If there's ever anything that you want to see on the agenda that you might have a question about, you can always feel free to contact that email address or myself. You can always email me as well, and we can discuss about whatever items that you have that you might like to see. But there is that public comment period to where you can come speak as well. And you can kind of just see, you know, how the meetings go and what all is discussed by the commissioners.
Joe, you want to unmute? I think you may have a question.
Yes, thank you, Norman. Good afternoon, Commissioner Mire. Any updates for appraisers or any instructions or updates that you want to share with the appraiser members?
Sure, absolutely. So again, as well as with the Real Estate Commission, the renewals are open for the appraisers as well. Appraisers are on a little bit different of a renewal schedule as far as they have a delinquent renewal period. They have through June 30th to renew their license. The delinquent fees run a little bit differently, but those do start as of January 1, but they do have until June 30th to renew. Keep in mind, if you're an appraiser, whenever you renew online, you do need to upload your education certificates. Being that we have federal oversight with the appraisal subcommittee, we are required to do a full audit of all education records. They're submitted a little bit differently than they are on the commission side. We don't get those records as of right now from the vendors. So we do require that you send those certificates in. Whenever you do send that in, you will need to go back into your portal to verify. It's not going to be an instant renewal because we have staff that actually have to look at those records. So you'll want to give it a couple of days. It's generally within 48 hours, Allison will have those updated to where you can get a copy of your license after that. I know a lot of you need it for your lenders and for the different companies that you work for. Again, don't wait until the last minute. I know a lot of appraisers need that prior to January 1. And again, because it does take a little bit of time for us to go through those certificates, please try to get that done as soon as possible. We are going to be launching the new appraiser board website. It might be Friday, if not early next week. It's going to be similar to the Real Estate Commission, but that appraiser board was severely lacking, I'll say, on that side as far as the website goes. So it's going to have a new clean feel. It's going to be much easier to use, much more user friendly as well. So be on the lookout for that also.
Great, and that's June 30th of every second year because we're on a 2-year cycle.
Yeah, different. So appraisers are staggered. Some will be renewing this year for 24, 25. I'm sorry, 25, 26. And then next year, some will renew for 26, 27. Right. Yes, they're on 2-year cycles. I think I'm getting those years confused, but yes, they're on 2-year cycles.
Right. Thank you.
You're welcome.
Okay. Any other comments or questions while we have Summer here before we move on to the next presenter? Any other questions, comments? All right. Well, Summer, thank you so much for spending some time with the brokers this afternoon. We appreciate everything you and your staff do, and we want to continue this great relationship we have with you all. And anytime we can help you, let us know.
Thank you, Norman. I appreciate it.
All right. Our next presenter is Ron Henderson, who works for the Department of Insurance. And I wanted Ron to come on and talk a little bit about where we are with property insurance. I know that is obviously a big impediment, continues to be in the real estate industry, in the market for those looking to buy any type of properties. And also having maybe touch on the fortified roof program and where they are on that and rolling that out. So To give you a little background on Ron, Ron serves as Deputy Commissioner at the office over at the Insurance Commission of Consumer Advocacy and Diversity. He handles all insurance issues dealing with the government, the legislature, and all of the governmental entities that they interact with at the Department of Insurance. He oversees their healthcare line program, benefiting over 70,000 Medicare beneficiaries as well in Louisiana. Ron has a vast knowledge of the insurance industry, going back some 27 years. Ron graduated from Southern University Law here in Baton Rouge in 1999, and he began practicing in April of 2000. His professional journey underscores his commitment to enhancing consumer advocacy, advancing insurance education, and ensuring compliance within the insurance sector. His multifaceted role in academia and government regulatory oversight highlights his dedication to his field and his ongoing contribution to both education and public service in Louisiana. So we're so excited to have Ron Henderson from the Department of Insurance to talk with us about something that's very critical to our industry, and that's property insurance, and also a little bit about the Fortified Roof Program. So Ron, welcome.
Can everybody hear me? Great. Thank you for having me. I really appreciate it, Norman. I really appreciate being able to come out and speak to you about insurance and what's going on in the market. You guys, just as much as the insurance consumers, you guys see it at the time of sale and buying of real estate properties, right? And we understand how tough it's gotten in this very, very tough climate. Louisiana we're in flux right now. We're in an insurance crisis, especially below I-10, I-12. And if anybody's telling you otherwise, they're just sugarcoating the problem. All right. After, and a little by way of background, after Ida, so Laura, Delta, Ida, Zeta, we lost 15 companies to bankruptcy. It's called receivership in the insurance world. And since then, another 35 to 40 companies have left the state of Louisiana for various reasons. They can't get reinsurance, or their reinsurers told them that they need to get off the Louisiana book of business. We have some companies that just walked away and said, hey, we don't want to be here anymore. And by way of example, if we look at Citizens as an entity, right after Hurricane Katrina, we had 177,000 policies in our Citizens program. Up until maybe a month after Hurricane Ida, we had 38,000 policies, which means that 15-year span, Citizens had roughly almost no policies left in this program. All right. So our market below I-10, I-12, Orleans, and which we consider our coastal market, which is everything that has a big body of water around it. So Lake Pontchartrain is coastal. The Gulf of Mexico is coastal. Some of our river parishes is considered coastal. So we're having a problem with getting insurers to come and write. Right now, I have 3, maybe 4 insurers writing in those areas. And when I say writing, I mean they're writing some policies, 1, 2, 3 here, 4 there, but on a wholesale market, they're not writing enough. We're not talking 1,500 policies or 500 policies or 100 policies in a day. We're talking 1 or 2 policies. So we have Citizens, which is taking on more and more of the policies that are coming out, especially after insurance companies now renew. That's going to be a big issue because, as you guys know, we are all citizens. So if citizens can't pay his bills, you, me, and everybody on this particular call, and all the citizens of Louisiana who have property and casualty insurance are paying for citizens' losses. You guys see that citizens assessment that's on your policies right now, right? That's going to be coming off in 2026. But if something else happens, we are all citizens. The more policies we have in the citizens, the more we may have to pay, because if they can't pay their bills, right? So of course we want more policies out of citizens. So what's the commissioner doing? We had a very robust legislative session last May, through June. Very robust. The commissioner made a lot of changes. We have a new commissioner, Commissioner Tim Temple, came into office. Some of the changes, property farm bills, Act 3, which was a big change, and established clear timelines for claims processing. Act 10, we did a speed to market, which says Louisiana used to be a prior approval state, which means in order for an insurance company to raise or lower its rates, it had to get approval from the Louisiana Department of Insurance first. Now we are a file and use state, which means the companies can file the rates with us, use them, and we review them thereafter. And if we find problems, we can have them fix those problems on the go, right? Louisiana removed the 3-year rule. And if any of you guys know, 3-year rule is if you were with your insurance company for 3 years or more, your property insurance company, you were basically married to that company in a covenant marriage, and there are only a few reasons they could drop you. All right. The new change is after August 1st, there's no more 3-year rule going forward. And if you're a legacy policy or a policy that falls under the 3-year rule prior to August 1st, the companies after January 1, 2025 will have the ability to non-renew 5% of that legacy business for any reason. So people have to be vigilant and watch their policies and understand if that company decides you're one of those policies, they can non-renew you, even though you're a 3-year plus policy. Any questions so far? And my ground rules are: if you have questions, ask the question. I will give you the answer.
Ron, maybe you can, add to that. Those 3 measures alone, what was the sense from the insurance industry looking at Louisiana in terms of after those passed? What was their sentiment in terms of how they feel, better, worse, or,
So we're seen in a better light. I mean, the 3-year rule is one of the rules that that rule was nowhere else in the world, only in Louisiana. Right. And look, for its purposes at the time it was put in back in 1991, 92, somewhere around there. It kept insurers in the state of Louisiana because, they weren't able to just move away from the coast. At this point, we don't have enough companies to have that luxury. And I think the companies are seeing us in a favorable light. The commissioner has been to Lloyd's of London, has been to London, has been to Bermuda. He's talked to the national carriers. He's talked to the national carrier associations. And right now we have 5 to 6 companies that are in the pipeline to be licensed come January 1st, right? Can't give you the names yet because they're not finished with their application process. But once that comes online, those companies will be able to write, and we have a commitment that they will write in some of the coastal areas. Now, 5 or 6 companies, is that enough? Not even close. We need 20, 25 companies. And I'm just going to be honest with you. We are in a crisis. This is a long-term commitment to trying to stabilize this market. Have we stemmed the bleeding? Yes, we have a tourniquet on and it's twisting tight and there's still blood spurting out, but we're hoping that we have enough companies that get in here and want to do business with Louisiana. And remember this, we are in competition with our sister states. We're in competition with Mississippi. We're in competition with Alabama. We're in competition with Arkansas. And if they have a better market or seem to have a better market, right, a more reasonable market, then the companies are going to be there. Just like you guys are in business, these insurance companies are in business to make money. When they lose 10 years of profit in one day, they tend to pull back, right? We have to kind of sit back and realize that we've made these changes. And yes, they don't seem like they're very consumer friendly, but we have to get companies in. We can still hold them accountable when they don't do things the right way and they harm the consumers in Louisiana, but we have to give them a little bit leeway to come in and do business with us, right? They can go spend their money elsewhere. One of the things, another another Act 757, removed that 10% surcharge on citizens policyholders for 3 years, right? So that 10% overcharge that most people see, it's going to go away starting at renewals January 1, 2025. All right. So that's a big one. The Fortified program. So you guys know about the Louisiana Fortified Homes program. We just did our 5th round of offerings to the citizens of Louisiana. It was for coastal areas. We had 12,000 applicants for 300 slots. After receiving those 12,000 applications, the commissioner opened it up again and added an additional 700 slots to the program. To this point, since our first offering, we've put on 1,500 roofs in Louisiana. One of the things that this does for us, it shows the commitment to the insurers that we want to have a sustainable and a fortified housing stock. After Hurricane Ida, we had $24 billion worth of roofs put on in Louisiana. So that's brand new roofs throughout the Southeast, Southwest, Orleans, Jefferson, I mean, everywhere where there was damage. As we fortify, we want to see about a 20% saturation point, because that's where the companies are going to say, oh, okay, we think that we can start writing more here. It happened in Alabama. Difference is Alabama only had two coastal counties. Louisiana has 26. All right. What we saw in Alabama is right there, when they got to about 20% saturation and using their building codes, their new building codes. So that's one thing you guys can push for with the government, with the legislatures, making sure those building codes are kept up to standard. Have those fortified building codes and making sure that those codes are enforced, because as we build a stronger stock, the companies will come back and write business. You know, I say this to my consumers all the time. Look, if the company has to put a new roof on your house, that's pretty easy. If you're looking, the median house probably $150,000 in Louisiana, that roof's going to cost you somewhere between $15,000 and $18,000, depending on the square footage, right? The problem is not the roof coming off. It's everything that happens after the roof comes off. The wet HVAC, the floors, the sheetrock, the clothing, the furniture, the appliances. So that $15,000 to $18,000 claim is now $150,000 or $200,000, right? Those are issues we have to look at. So if we get those better roofs, better building codes, we will see a reduction in pricing. Now, if you get a fortified roof, and you don't have to do it through the Department of Insurance, you can get a fortified roof on your own, and your consumers need to understand that. If you do that, you're going to see a reduction, because every company had to put in a fortified roof reduction, with the exception of surplus lines riders. All right, so that's the distinction. So a consumer has to know what type of company they have. An admitted market company, yes. Surplus lines company do not have to give you a fortified roof reduction. All right. Any questions so far? Man, I must be doing great. You know, I think we have turned the corner. We're 3 years post Hurricane Ida, or almost 4 years. And look, I think we're going to start seeing companies come in. I think if these 6 new companies, if they are approved to be in the state of Louisiana, because our process is a little bit more stringent now, word of mouth works. As those companies come in, they're able to write, they're doing good business, you'll have other companies that are going to want to write here. And, you know, it's not a tomorrow thing. It's a 2-year, 3-year we're building capacity again. We're getting companies that want to write. We want them to come here and go, hey, Louisiana is a good place to write business. And as we do that, we will see more companies coming in and writing. Commissioner is very bullish on getting out and going to companies. He is going to the company. He's not waiting for them to contact him. He's going, hey, company, we see you writing all the sister states around us. Why aren't you writing Louisiana? What's the difference? What can we do better? What can we change? What do we need to change? Some things we're not going to change because it's not going to help the consumers, but show me, tell me, give me an idea of what it's going to take to get your company to come here and write business with us. And no, we're not paying you to do it because the incentives are over with. We did the incentive. We have some, let's see, is the governor helping or hurting the policy? So didn't he veto something that would have been helpful? Oh, that's a, so he did not veto anything on the property side. His veto was on the auto side. And that was a problem in and of itself. You know, the governor saw fit that particular piece of legislation he felt that it didn't serve the citizens of Louisiana. We differ in opinion, but he's the governor and the commissioner's not. See, can you comment?
Ron, there was one, can you comment on the issue if there's a roof over so many number of years will not be able to be insured? And they're hearing anything over 5 years, 10 years. Is there any clarification on that?
So we have a few companies who are in their underwriting guidelines, they're saying they're not writing anything over 5 years or over 10 years. We have a few companies that are doing that right now. And they are, you know, because of where we are and what we're writing and how many few companies we have in their underwriting guidelines, they can pick and choose on what they're going to write. Now, how can a consumer do something about that? Go out and get a wind mitigation survey. You get that wind mitigation survey, and if you meet all the standards of the wind mitigation survey, you may get a discount on a company may write you. If there's no guarantee, the problem with the wind mitigation survey, because there's no guarantee and you have to pay for it as a consumer. Now, you get a new a fortified roof, most companies will write you. Most companies. There's a few that won't. And we have very few companies below I-10, I-12. We're not having a major problem above I-10, I-12. It's below I-10, I-12 where the problem lies right now. And where do most of the people in Louisiana live? Below I-10, I-12, 80% of the people. So I was down in Houma today, and we were talking about just this fact that, yeah, we don't have enough companies, and it's killing some of the culture and killing some of the communities there, because not only can people not move, they can't sell the houses because they can't afford the insurance, and they can't buy insurance, and they can't sell the house to anybody because they can't afford the insurance. So we have a crisis, and we have to get more companies in. We have to do everything that we can, and hopefully, and I say that I can say hopefully again, yeah, hopefully we'll get more companies that come in and want to write, but we have to show them that we are a good place to do business, because they are businesses just like you. And I know people, someone mentioned to me today, yeah, the top companies that made money last year were insurance companies. That was on their investments. Quite frankly, it's not on their writings. I can tell you that much. And then let's see, can you explain the new paint inspection? I have not seen that. The question is, can you explain the new lead-based paint inspection letter that insurance companies are now asking for? I haven't seen that. I'm going to have to ask a question for my P&C division. I think it may be the older houses they're asking the questions on. I'm not sure, so I'm not going to sit here and make something up. I don't know anything about that. I will ask, and I will get an answer back to you guys as soon as I can. I'll send it to Lori.
Yeah, and we'll get that out. And I'm going to follow up with the National Realtors, because obviously the lead-based paint regulation is federally driven by the federal government. So we're going to see if I'm not seeing anything from the National Realtors that indicates that, you know, this is taking place, but certainly obviously it is. And so we're going to check that route too and see if NAR has heard around the country where insurance companies are now asking for this lead-based paint as well. So we'll get something out on that because we just heard of this just recently.
Yeah. Question is, can you talk about name storm deductibles? Do companies still have this versus wind and hail deductible? Yes, companies still have name storm deductibles. Some companies have name storm deductibles, wind and hail deductibles, and all peril deductibles. It is their way of trying to mitigate their exposure, right? It's all allowed. Wind and hail name storm deductibles are in every coastal state in America. Any state that has a propensity to have hurricanes, from Maine all the way through Texas, and I guess they may call it something else in California and Oregon. Maybe they call it tsunami coverage. Who knows? But most, if not all, states have that type of stipulation in the policies as far as deductibles are concerned.
All right. Any other items, questions? Unmute or put them in the chat for Ron while we have him. He does a great job and has been doing a fabulous job for years. And we lean on him a lot over there for information and updates and other things. And certainly we support the commissioner in their efforts during the legislative session, because we know it's important to be able to bring more companies into the state. Will only help solve the availability and affordability issue that we're going through now.
Yeah, and definitely, look, I want to make sure that we are all working together, not just the insurance department, not just the real estate commission, but the banking industry. They have a part to play in this. And if they're sitting on the sidelines, we need to pull them in. Because if you lose a community, say if we lose a Homer, and people start pulling out of Homer and dropping their policies and leaving their mortgages, what happens to that industry there? Right? Nobody's going to be unscathed in this. So we need to all work together and make sure that we have a viable market, and that we can do everything we can to get our legislators to do everything we can to make sure that insurance is there and available for people who need it.
All right. Any other comments or questions for Ron? All right. Well, Ron, we certainly appreciate your time. I know you're busy running the roads and doing the great things you're doing at the commission, for the commissioner and for the insurance department. So we certainly thank you for spending a few minutes with our brokers statewide today.
Thank you. Thank you for having me. I appreciate it. Anything you guys need, just reach out.
All right. Thank you, Ron.
Bye-bye.
Our next speaker really needs no introduction. She's just, and I'm trying to say this, she's just a wonderful person, but she's an expert on a lot of issues real estate related. She's a broker. She practices and has for many years, but she also instructs realtors and others around the country on all topics real estate, particularly those topics that are hot off the press, that are happening in the industry now. She's a forward thinker. Lynn was instrumental some 20-something years ago in 1997 when Louisiana changed its agency law. We patterned our law after Lynn, where she's from, in Illinois. She's actually lives in Chicago. And so Lynn was instrumental in making sure that our law could work for the consumers when agents, were representing clients and realtors were representing clients in the transaction. Lynn's obviously, Summer mentioned earlier that Lynn is teaching next year the mandatory buyer representation, and it'll be very updated to the latest and greatest happenings, as that's a continuous evolution with all the practice changes. So before I ask Lynn to give you some tips going into 25, things that she's learned as of August 17th, fast forward to today, on all the new practice changes. I want to say that we'll have her in Lake Charles in February to teach the 4-hour mandatory. So it'll be early in the year, and you'll learn a plethora of knowledge. We encourage you to get your agents to sign up for the realtors meetings in Lake Charles. They're at LREALTORS.org. And it's a great way to network, but also learn about this topic that Lynn wrote the course for the Real Estate Commission and is the 4-hour mandatory. So Lynn, we're so thrilled to have you on the Zoom today. And who better to have walk us through all of the changes that have occurred since August 17th and even before that?
Thank you, thank you, thank you, thank you. I'm going to share a PowerPoint that I created. At least I hope I am. So let's see what happens. Because sometimes things don't always work the way you want them to. It looks like it's going to be fine. So hang on one second. There we go. So you should be seeing my PowerPoint now that says practice changes, pitfalls, and possibilities. And thank you, Norman, for having me. And I just wanted to say hi to everybody because I know some of you, and we've even had a few drinks together over the years and all that kind of stuff. But I wanted to say a couple of things very quickly as we get started. I've been on here since you guys started at 3 o'clock. And I wanted to say to Summer, half of what she talked about was the same problems we have in Illinois with getting our agents to renew their licenses. So you're not unique in that. And now I want to say to you, we are even having problems, and there is not 1 millimile of the state of Illinois that could be called coastal. And yet we're having trouble with insurance. We've had areas of, and the roof problems. So what you're dealing with in Louisiana is absolutely monumentally more than what we're dealing with. But I think it's very interesting for you guys to know this is not just hitting the parts of the country that are on the coasts. Does that make sense? Where there are the storms. We're having the same problem. It is not going to be okay if we don't all band together. So I'm just repeating what has already been said, that we're going to have to work on this. And that's where we're going to need some help with NAR, from NAR and stuff. Okay, so the new normal, we all know what it is, but and I'm going to make this PowerPoint, these slides available to Norman. So I will get them sent over when we're done here. So that you guys can use them in your offices as well to talk to your agents, because that's what I wanted this to kind of be for, is for you guys to be able to use, because we do have the settlement now. And you all know this, it's not that the settlement is new. There's nothing changed in the settlement. The settlement for the most part is exactly what it was. My PowerPoint's not working and it looks like everything just froze up. Hang on just a second. I don't even know if you can still hear me, because on my end, everything just froze.
We can see you. We can still hear you.
You can still hear me. Okay. Because
Maybe-
right now, on my side, the PowerPoint's not moving.
I would stop screen sharing and then try and share again.
It won't even let me do that. It's not letting me do anything at all at the moment on my computer. So I'm going to guess it's my computer more than anything else. So hang on one second. Let me see if I can fix it. If not, I'm going to go ahead without it, except I really wanted to use it. So hang on one second. Are you still there, Lori?
Yep, but you have frozen up.
Yeah, it's frozen. So hang on one second. God, technology is a wonderful thing when it works. So hang on one second. All right. I'm back. Can you hear me now? Yes. So let's try this again. Can you hear me? Everything good,
Yes.
Norman?
We're good.
All right. Okay. So I don't know what happened there. So we're not even going to try to figure it out as long as we're back. So you know that the settlement moved all the compensation off of the MLS, and that has been approved. So no offers of compensation in the MLS. The sellers can still offer compensation and they can still offer concessions. And we're going to talk about that, and to get the agents to understand that there is a difference between the concessions and the compensation. and that it should not be lumped together. And we want to talk about, that's part of what we'll talk about. So I just wanted to remind everybody, in case they were not aware or had forgotten, that that was the number one part of the settlement. The second part of it was the written buyer agreements. So it does require all MLS participants who are working with buyers who are looking at I don't want to say single family homes, but before they're looking at residential properties, which is 1 to 4 unit properties. They have to have a written agreement with buyers before they show the property. If they're expecting the buyer to pay compensation, or the buyer is going to be asking the seller to pay the compensation, there has to be a fee amount in that buyer representation agreement. And it cannot be open-ended. And I'm going to go through the basic part of this, and then we're going to talk about what's happening and what to watch out for and what we need to caution our agents on. So it cannot be open-ended, and we cannot accept any monies more than what is in our buyer representation agreements. And I want to remind everybody, it's not just because the settlement said that's how we were going to move this thing forward so that we can get these lawsuits behind us, but it's also because we have signed a contract with the buyers. And when we sign a contract with the buyers that says that the compensation I'm going to make when I sell you a home is X, and you, Mr. and Mrs. Buyer, are responsible for paying it, even though you're asking the seller to do it, for me to come back and say to the buyer, because the listing office is offering more, that I want the buyer to agree to let me get more, is just perpetrating the whole lawsuit problem of we're in this for ourselves and we're not putting the client's interest ahead of our own. I want you to think about talking to your agents about this is the long game we're playing here, not the short game. I'm in the process of doing an ABR. I did the first part of it this morning. I'm doing the other 2 segments of it tomorrow and Friday. And I said to the group that's on there with me on the ABR, is I said, if you are in this business for the short game, in other words, all you care about is making money off of each individual transaction, and you're not looking at building your business for the long term, and this being your profession, I suggested that they get out of the business, because they're the ones that are hurting us, because they're not looking at this as, I want to build this business up. They're looking at it as, I want to get the most money I can out of each and every one of the individual transactions. If they want to have referrals coming from these buyers down the road, and even tomorrow expect that buyer to maybe refer a relative or a friend, they're not going to get it when they do what the buyers have said was a bait and switch. Meaning, I said I was going to do it for X, but now that I can get more, I want the buyer to let me get more. We need to be really careful with that. So the court granted the final approval to NAR's settlement deal. There were many, and I'm going to give you a little bit of a piece of this Inman article where they spoke to the issues. Tuesday's final approval, because it just happened on the 26th of November, is not the end of the antitrust litigation. And a reminder to everyone that it mentions NAR and home services. We all know that RE/MAX and Keller Williams and Anywhere, which includes Coldwell Banker and C21, was all named in this. The other 3, home services settlement, had not gone through by the time this case was heard in Missouri. So they're still named, but they weren't the only ones. And I just feel really bad for people who don't know the whole genesis of this, thinking that they were the only brokerage company in the country that was named. That is not true. There was a bunch of us. Okay. So it says Tuesday's ruling will almost certainly be appealed, and any settlement funds collected will be held in escrow until all the litigation avenues have been exhausted. We are moving forward with the settlement, knowing that we don't know whether or not there's going to be some appeals. I understand that there are a couple of them that have, and Norman may know this, may know a little bit more than I do. A couple of them are either already filed or are in the process of being filed. Is that what you heard, Norman?
Yeah, that's what I'm hearing. Yes.
Yeah, we haven't gotten anything absolutely in writing about that. Some of the appeals, however, are coming from the plaintiffs. And I have to say it. The appeal, from what I heard from one of the sources, was they're appealing how much they got versus how much the attorneys got from the settlement. So the appeal is not about the real estate side of it. One of the appeals that we have heard about is that they think the attorneys got too much and the plaintiffs didn't get enough. And I'm only smiling because we've been hearing that for the last, 2 months, right, Norman?
That's correct.
That they've been complaining about that. Okay. So, but you need to be ready for the fact that we may be hearing more stuff. That doesn't stop us, however, from moving forward with the settlement the way it was approved. It also mentioned, and I want to talk to you about that as well as managing brokers. I think you need to be aware that there are still other things about NAR's rules that both the Department of Justice and some of the lawyers are having a problem with. And it says in this last paragraph, including NAR's clear cooperation policy, no commingling policy, the three-way agreement, and tying MLS to the Realtor membership. So with that said, I just want to briefly give you a little overview of the other issues. The decoupling of the brokerage compensation. The DOJ has said all along that they do not want offers of compensation going from the listing brokerage to the buyer brokerage. They would like to see it. It's okay, they think, to go from seller to buyer, but now they're having a problem with proactively offering compensation because they believe that steering is still happening. Now, remember that steering in the antitrust world is not the same steering in the fair housing world. Steering in antitrust means that they believe that buyer agents are showing properties to the buyers based on how much compensation the agents will make, rather than showing the properties that are in the best interest of the buyers. I know that you and I and most of us all agree that the vast majority of our agents are not doing that, but it only takes that minority of people to screw things up for the rest of us. So that's one of the DOJ's other issues. The clear cooperation policy. We need to be aware of what's going on with this, because there is a faction of our business out there, some brokerage companies, who want it to go away, and they're very vocal about that. And whatever side of this issue you're on, this is not a place for us to be having the debate necessarily. It's for us to understand the ramifications of this. So the clear cooperation policy is every MLS has a rule of when your listings have to go into the MLS, depending on, once they go public, is it 24 hours? Is it 48 hours? Is it one business day? It doesn't make any difference what it is, but the rule is there that says if you belong to the MLS, that you must, if your listings are going to go public, unless the seller has given signed an exempt form, you have to put your listings in the MLS within a certain period of time. And that's called the clear cooperation policy. And there are people saying they want to get rid of it. And the DOJ is weighing in on that. I have to be honest and tell you, I don't think the DOJ has said one way or the other. They just said it was one of the things they were looking at. We have had people weigh in from the fair housing side of things, saying that they think getting rid of it is a problem because it would lead to brokerage companies having listings in their office that they were not sharing with other brokerage companies and were not making publicly available. And there are fair housing groups that are speaking against it. But it is something that is still being discussed. And buckle your seatbelts. In the other piece that we're dealing with is the tying of MLS services to Realtor membership. Is there some push out there for the decoupling of that? And the answer is yes. It just happened. Where was it, Norman? Phoenix, right? Yeah. They're allowing non-realtor access to the MLS. It's a push. And then the last but not least that I want you to be aware of is, so that you know, is this. It's the no commingling policy. And I keep telling all of the lawyers, they use terms that in law may one thing, but to us with our boots on the ground out in the field, it means something different. To me, commingling has always been, I took escrow money and went to the boat gambling to a casino and used it to gamble my way through the casino. That's commingling funds. This is not. This is the rule that most MLSs have, that if your brokerage company is getting the MLS data feed, then you cannot have for sale by owner properties on your website next to the brokerage company listings. And it's like, I don't know where we're going to go with that either. I just think it's real important. I don't always talk about this with all of the agents because they don't always get it, but we're managing brokers and we need to be aware of what's going on, even if we're not going to have this conversation with our agents. So you might want to leave this slide out of your conversation with your agents, but they need to be aware of it. This is what we still could have more lawsuits on, are these things. All right, so where are we at on the listing side? You know that NAR made the education portion of the ABR program free to all of our realtors. We've had a lot of people go through ABR, but we've also had more who didn't go through it than went through it. That's a fact. That said, they did not make, nor could they, because they don't own the SRS or the seller representative specialist. But I think we thought, well, it's no big deal. The listing side will be okay. It's not. We're having almost more problems with the listing side right now than we are with the buy side. So I thought rather than tell you how to do things, because you already know that, let's talk about what's going on and what needs to happen. The listing agent has a responsibility to explain the buy side compensation options to their seller. And they need to explain to their seller that the probability of the buyers requesting that the sellers pay the compensation is still going to happen. And I am going to say 95% of the time. And I'm going to say almost 100% of the time, if we quartiled all of the sales in the entire country, and we looked at the top quartile is all those really, really expensive properties where the buyers have a lot of money, they may not be asking the sellers to pay the compensation because the buyers have the money. The second quartile, so that's the second quartile, most of them have the money, but by golly, you and I are working with the bottom two quartiles most of the time, and those buyers don't have any what? They don't have the money to pay their buyer brokers themselves. If the listing agents are not preparing the sellers for the fact that the buyers are probably still going to ask them to pay the compensation, even if the seller chose to say they weren't going to pay it, then their property is liable to not sell because the buyers don't have the money to pay it themselves. So they also need to prepare their sellers for how, whether they do or do not accommodate the buyer's request, how that could affect their sales price. I've used buyer rep agreements here in Illinois for over 20 years. And I can tell you for a fact that when my buyers are paying me directly, they are paying the sellers less for their houses because the house price that's on there included of the comps included the sale price, included the buyer brokerage compensation. So if my buyer's not asking your seller to pay it, they're going to offer the seller less money because the buyer's paying it themselves. I think we have listing agents, my friends, that are not having these conversations with their sellers because we still have some listing agents who are, no, we still have some transactions that are not going together because of the compensation. Sellers have a choice when they are offering compensation. And they can choose to offer a specific amount. So if I'm a listing agent and I'm sitting down with a seller, I can say, how much do you want to offer to the buyer brokerage? And they can choose a number. Okay. They also can choose to say, we are not going to specify or be proactive with offer of compensation, but we will be open to negotiating compensation in the contract. And that is where we see the vast majority of the brokerage companies at right now. As I travel across the country, what we're seeing is the sellers are saying, and it's now an option on the listing agreement in many, many cases, it says, yes, I will pay, and this is what I will pay to the buyer brokerage, or that we will consider all requests depending on what's in the contract, in the sales contract. Because we are better off in most cases not saying how much the compensation is going to be. The problem we're having with that is buyer agents. So let me do it a little differently. The seller has to give me, the listing agent, specific directions for disclosure of their decision and how much compensation they're going to offer. Could they say they're going to pay X% and still direct me to tell you, if you asked me how much the compensation was, that yes, we're willing to pay compensation, but it will depend on the rest of your buyer's offer. Please put it in the contract. Yes, they can. And that's where we should be at, because we don't want the buyer agents showing or not showing our listing based on the compensation decision that our sellers have made. I wish I could sit here and say to you that this was not happening. It's happening. You know, where I don't know if any of you are on a Facebook group called Real Estate Mastermind, but if any of you are on there, I don't want you to respond to anybody on there. I don't want you to think you can fix their attitudes by responding. I don't want you anywhere near it other than to monitor it. When you see, and that's only one Facebook group, there's probably dozens of them out there, that they're asking and saying things like, if these listing offices don't start paying us what we should, what I'm worth or what I should be getting, and I've even seen them use the word standard. We got sued because of all of this. We've got to get our agents to stop talking about their standard compensation and how much should be paid to the buyer brokerages by the listing side. This is the paradigm shift, my friends. It's not the listing side controlling this anymore. It's the buyers saying how much their agent is going to get, and that's all the agent can get. It's irrelevant now how much your seller wants to offer. It's all about what does the buyer want the buyer brokerage to get. And I can't take any more than that. So what difference does it make if you're offering this number when I can only take this number? I don't even want to know it. As a buyer agent, I don't even want to know it. So we need to have these conversations with our sellers. Now, the listing brokerage has choices. You can decide as a brokerage that you want the listing side compensation paid through your brokerage company, just like we've always done it. Prior to the change, the listing office charged the seller the compensation, the whole thing, both sides. And then the listing brokerage is the one that paid the buyer brokerage. I know it was done through the closing. I know it was technically I know, we all get that. But the listing brokerage then was the one that was offering the compensation. But that was because it was in the MLS. So when I put the listing in the MLS, I, as the listing brokerage, offered all the rest of you a compensation if you brought a ready, willing, and able buyer and we had a closing. It's not in the MLS anymore. The listing brokerage would have to, if they still want to offer it, they would have to give a brokerage to brokerage compensation agreement to the buyer's brokerage. All I want to say is this is taking too much time. And a lot of the brokerage companies, I think we're close to about 60% of the companies across the country are no longer having are not using option one. The sellers are still going to decide how much. But the other issue is what happens to the buy side overage if the seller offers more than the buyer asks for. So if your seller was offering, listing office is going to get this number, okay? The buyer brokerage, we're going to offer X. I come in with a buyer rep agreement that only says I get Y. Y is 1% less than X for my explanation. There's now 1% more on the buy side that isn't coming to me because I can't take it. I'm not asking for it. What are you going to do as a listing brokerage with that 1%? Are you keeping it on the listing side? Or are you saying to the seller, you just saved yourself 1%? I don't know what's in your listing agreement, but I'm going to make the argument that if your listing agreement said listing side is this and buy side is this, and the buy side gets, there's 1% left over in that bucket after the buyer broker asks for their compensation, you can't just automatically take it and add it to the listing side without your seller's knowledge that that's what you're doing. You're going to have to rethink your policies on some of this stuff because it's all changing. So, and I'm not real sure you still want to do it this way, because the other option is the seller pays the listing side to the listing brokerage. No change there, always has been. But the seller then pays the buy side to the buyer or to the buyer brokerage. To the buyer or to the buyer brokerage. And when I was there with you guys in, where was I? Lafayette, then Baton Rouge, and then in New Orleans, and I did the train the trainer on the new course, we had a long discussion about this, and there were title company attorneys in that room because they're also CE instructors. And they said they're going to be asking for a closing statement, a commission statement from both sides of the transaction now. They're going to have to. What part of this is the listing side and what part of this is the buy side? Because it's not always going through the listing office any longer. It's two entirely separate pieces. I know. I got people going, well, we've never done it. We got to stop saying we've never done it that way. I know we haven't. I've been doing this as long as some of the rest of you have. It just is, we've got to make a change. Okay. So listing side, seller has options. Are they going to proactively offer compensation, or are they going to say we will pay it, but we want to see what it looks like on the bottom line in an offer from a buyer? And that is where we need to get this. And we'll talk about negotiating it in just a couple of minutes. Okay. Buyer agent's responsibility. Buckle your seatbelts, folks. It's our job as a buyer agent to explain to the buyer how compensation is paid. It is our job to get that buyer representation agreement signed. And I'm going to tell you that I, on a daily basis from all over the country, because I teach all over the country, and that includes some of the agents in Louisiana, because I've been, as Norman said, coming with and being there with you guys for a long time. I'm hearing the buyers won't sign the buyer rep agreement. And then I always say, when are you asking them to sign it? And here's what I hear. Well, I sent it to them in DocuSign or Dotloop or whatever prior to our meeting, and they wouldn't sign it. No kidding. There's no way they're going to sign it without us doing our buyer counseling session. So we need to teach our agents how to articulate their value proposition. I hate that phrase. I say it so many times every single week. I'm tired of saying it, but that's exactly what we need to do. I want you to help your agents if you can. I know some of you already are, but remind them that they didn't send a listing agreement to a seller all these years in DocuSign and say, I'll list your house, just sign here, and this is what we're going to list it for. No, we sat down with the seller for an hour or an hour and a half, and we, can I say it, articulated our value proposition, explained to the seller what we were going to do, how we were going to do it, and why it was a benefit to the seller to list their home with us instead of listing with anybody else. But yet now the buyer agreement comes along and we're expecting the buyers to just sign it because we told them to. We have to be able to explain how our compensation is paid. We have to be able to negotiate our fees. We have to be able to get the buyer rep agreement signed. And I want to say to you that this is going to eliminate all the people in our business when they are only order takers, that they felt that they were entitled to get that compensation that was offered in the MLS. If you really, really look at it, this is going to elevate our profession. It may eliminate some people from our profession who won't make the shift, or they can't because all they are order takers. They're not negotiators. We keep telling everybody you have to learn how to be a negotiator. So all of this has to be done. Buyers have choices. Buyers can choose to pay their brokerage themselves. And we all know that most of our buyers don't have the extra money. Let me tell you a quick story. I was getting into an Uber at my house here, and I'm about 20 minutes away from O'Hare, from Chicago Airport. So I got into the Uber, and the young man who picked me up, and we introduced ourselves, and they always ask, where are you going, business or pleasure or whatever. And I always make sure they know I'm in the real estate business, wink, wink, because I want to make sure they know that. So I told him that, and he goes, yeah, isn't it? It's really a shame. My wife and I saved up all the money so we would have our down payment and our closing costs and all of that. But now that we have to pay our buyer brokerage fees, we're not going to be able to buy. So this weekend, we're going to have to re-sign a lease for a year, and hopefully we can save the money so we can buy next year. And I went, whoa, his name was Brian. I said, Brian, no, who told you that? I said, are you reading what the media is saying? Because they got it all messed up. And he went, no, my agent told me that. I went, don't tell me who your agent is. I said, but I'm going to tell you right now, your agent is wrong. You could still buy a house and ask the seller to pay the compensation. You as a buyer do not have to save up all of the money that it's going to cost you to hire an agent. You can ask the seller to do it, and then it goes onto your mortgage and it's part of the transaction. And that's the way it's been done for years. So the media is leading the buyers to believe that something is radically changed, when in fact, it hasn't changed for the consumer as much as it's changed for us. By the way, that I said to him, give me your name on the back of my card, and I will. And I told him the name of the agent I was going to refer him to. I got to the airport. I called the agent I was referring him to. And I want to tell you that Brian and his wife have bought a house. They're going to close before the end of the year. And it was their agent who told them that they couldn't buy, because you have agents. And so what I'm telling you that story for is that I think we still have agents who believe that the buyers are going to have to pay the compensation themselves. They can pay part of it themselves. They can ask the seller to pay the other part of it. It can be done all these different ways. They could choose to not look at properties that don't cover the compensation. So if I had a buyer rep agreement with a buyer for X amount, my buyer could say, I don't want to look at any properties that don't cover that. And I want to tell you that that is not how we teach it in ABR. It is not in the best interest of the buyers for them to do that. What the buyer should be doing is looking at all of the properties that fit their needs, regardless of the offer of compensation, because we're going to put the offer of compensation into the contract and negotiate it along with everything else. So this is what I say to your agents when I teach the classes. I ask them, how many of you over the years have had buyers who ask the sellers to pay their closing costs? And everybody in the room raises their hand, except when I was teaching in Beverly Hills. That was the only place I ever taught where they didn't all raise their hands, because they didn't have any buyers asking to pay closing costs there. But other than that, every place I've gone. And I say to them, so did you call the listing agent before you showed the property and ask the listing agent, will your seller pay closing costs for my buyer? And they all go, no. Then why are you calling them before you show it to ask if they'll pay compensation? You're going to put it in the contract as a request, just like you would if it was the closing costs being paid. And everybody goes, yeah, but there is no but anymore. The bottom line is we're going to handle it exactly what. Why should my buyer not see a perfect home for them? Because the seller has made a rash decision to say they're not going to pay closing costs. Every one of us has had sellers who, when we listed their house for $300,000, said to us, I am not going to take one penny less than $295,000. And yet we brought them a $290,000 offer, and they couldn't find a pen fast enough to sign it, because what they say and then what they do when they see the net, does that make sense? The bottom line is entirely different. We just need to negotiate this. And we have people, I think, that are afraid to negotiate. So the buyer and your agents should be having this conversation. Mr. and Mrs. Buyer, we have two ways to approach this. One is that you could request that I call every listing agent or send an email or a text or whatever prior to showing to verify the compensation, that it covers what's in our buyer rep agreement, which means it is going to delay us setting appointments. It may delay us from showing the properties. Or the choice could be, Mr. and Mrs. Buyer, we're going to look at all the property that fits your needs and put the request for compensation in the offer and negotiate it in the offer along with everything else. I'm going to say to you, option number 2, because that's in the best interest of the buyers. And I would argue it's in the best interest of your agents so they don't get accused of not showing the property because of the low offer of compensation. I don't think a lot of them are doing it. But by the way, I also don't think the buyers are saying it. I don't think most of the buyers are choosing option number one. Oh, I don't want to see it unless it covers the compensation, unless the agent kind of steered them. I don't want to use that word. Kind of guided them in that direction. And why are they doing that? All right. So options for the buyers, options for the sellers. And now it froze up again on my end. I know it's probably my end and I don't know why. I'm still here. If you can still hear me, I know the screen just went blank.
Then
So
I've got a couple of questions while you.
yeah, let's do that while it went blank.
Do we need to ask for a copy of the buyer broker agreement to prevent paying more than what they contracted for?
No, you cannot. I will not give it to you. It's none of your business. So let me talk about that. You as a listing agent I'm not supposed to get any more than what's in my buyer rep agreement, but my buyer rep agreement is between me and my buyer. You as a listing brokerage do not have the authority, nor should you even try to make sure that I'm doing the right thing with my buyer. I have no right to see your listing agreement, and you have no right to see my buyer representation agreement. I'm serious, guys. It is not your job as a listing agent to verify that I'm doing the right thing with my buyer. Just like it's never been my job as a buyer agent to verify in your listing agreement, because I can tell you there have been times where I don't think the listing agent told the seller the truth about what they were paying out to the buyer brokerage. I know that for a fact, that listing agents were saying we're going to pay X and they were paying less than that. And yet I, as a buyer agent, didn't have any right to say, I want to see your listing agreement to make sure you're paying me what you told the seller. So that's a great question and we get it all the time, but no, it is not up to, but the title companies are going to want to see a statement so that they know, does that make sense, what's going on? The buyer's lender may want to see the buyer rep agreement so that they can verify it. And that makes sense, but not the other brokerage company. Good question. By the way, the PowerPoint came back up, but I'll answer the other questions, Norman, as long as we were doing
Just
that.
one more. Under Article 16, would a grievance be considered if the buyer's agent knows what the offer of compensation is, but then the buyer requests to put a different, say, higher amount in that offer?
So is it in the chat?
It is.
And yet, for whatever reason, there it is. Hang on 1 minute, because it's easier sometimes if I don't see it. All I saw was Debbie's, do we need to ask for a copy of the buyer brokerage agreement? Okay.
Under Article 16,
Okay.
could a grievance be considered if the buyer's agent knows what the offer of compensation is, but then the buyer requests to put a different higher amount in the offer, the buyer's agent?
So it would be I don't know who's going to file that grievance, and there's the issue. It's not the listing agent's job to file that grievance. The buyer could. Does that make sense? The buyer could say, I had X% in my buyer rep agreement, and then you asked for more than that, and that violated our contract. But the listing agent would have no right to do that. The sales contract is between the buyer and the seller. The buyer and the seller, if my buyer asked in the contract for your seller to pay this number, and it was more than what was in my buyer rep agreement, then the only person who could get upset about that would be my buyer when I asked him to pay me more than what was in my buyer rep agreement. When we do the ABR class, we go through the different contracts in the buyer rep agreement. Yeah, Steve just said, I was told that Article 16 would apply because let me move this over, because the buyer's agent was trying to alter the listing agreement terms. Yeah, but the only person who could file the complaint, that's my point. You're right. It is a violation, but the only person who could file the complaint would be the buyer, not the listing agent. Does that make sense? Because the contract is between the buyer and the buyer brokerage. The listing side is not a party to the contract that has been breached. You're right. I violated my duties to my buyer client, but the only person who can file the complaint is the buyer. Just like the only person who could have filed the complaint if the listing agent took a listing, told the seller they were going to pay X and only paid out Y, does that make sense? Then the only person who could have filed that complaint would have been the seller. So yeah, it could be. Now, I also want to tell all of you that I'm on the Pro Standards Committee at NAR. So are a couple of you guys, or at least one of you is, I think. We all know that there are many, many articles of the code that are going to have to change in the next year. And we have been told that. We are starting to look at all of that. They were not going to even start to change the articles in the code. I'm not saying this one's going to, Steve, at all. But some of them are going to have to. And let me tell you, because we're not going to spend a lot of time on this because I need to wrap this up. But that whole thing with variable rate compensation being disclosed is going to have to be revisited. Because right now, let me tell you, every single multi-offer negotiation is a variable rate. I have 5 offers on my seller's property. I have one off. My buyer and I have one buyer up, one compensation. You have a compensation with your buyer. Norman has compensation with his. Rhonda has compensation with hers, and all of them are what? They're different. I want you to seriously realize what the disclosure of variable rate looks like. It looks like we were trying to level the playing field. I don't think we need to say that out loud. You might want to cut that out of the tape. Well, because that's exactly what it looks like, is that we wanted everybody to know that somebody was getting less compensation than the rest of the people were. And then we wonder why it looked like we were price fixing. So there's a lot of things when you look back on it, we go, okay, it sounded like a good idea at the time. Not so good when you look back on it. Okay. You, us, you and I. Yeah, okay, Jamie, it said it's 2 different things though. What is signed in a buyer broker and what is told is being offered by the seller is 2 different things. If the buyer broker agreement says 3 and then told by the listing agent seller only offered 2, buyer agent asked for 3 in the contract, there would be no grievance there. Here's the issue. First of all, I've done everything I could all day to not be using numbers. So let's not do it anymore, okay, with the 3s and the 2s. I know what you were trying to say, but here's the issue. We do not have time in the half an hour I was given to take a deep dive into this. Does that make sense? This is stuff that we talk about in 2 days of ABR. And we're trying to do it in a half an hour. So it is no problem at all, Jamie. I'm glad because there is a difference. But here's the issue. When I take the listing, I do not have a buyer for my property usually. Agreed? I don't have a buyer. I haven't signed a buyer rep agreement with my buyer. So I don't know what my buyer wants me to get paid. So at the time of listing, right now, what it says in the rules is that in the code is if I take a variable rate where the seller is going to pay a different commission if I sell it myself. The point I'm trying to make is I don't know that right now. I'm taking a listing where all I do is solidify what the seller is going to pay us on the listing side. I don't know what I'm going to get on the buy side, even if to the point, even if my seller said I'm willing to pay X and my buyer comes in and says I should only get the lower number, that's still not something I was able to disclose at the time I took the listing because I don't know what the number is going to be until I have a buyer. All I'm saying to you is that the issue of variable rate is going to have to be redefined. So we all have to take a big old deep breath, and we need to say we might not be able to apply the code of ethics as it's written to the business in the new normal. I'm serious, we can't in all cases. So you refusing us, our agents, you, me, whoever it is, refusing to show or making the property unavailable because of the compensation is a violation of your license law, the code of ethics, the NAR settlement, your contract with the buyer, and it's why we were sued in the first place. So if we are discouraging or instructing the buyers to look only at properties where the seller is offering compensation that covers our obligation, is going to be, in my opinion, and the opinion of a whole lot of people, a violation of our agency duties. We should be encouraging the buyers to look at all of the properties that fit their needs and then negotiate the compensation in the contract. So now, We already talked about this, so I don't need to do it again. So just a reminder, and this is my long game playbook thing. It's not just the settlement. You signed a contract. You want to so now you want to renegotiate it so you can make more money. How does that make you look to the buyers? It just doesn't even make any sense. You don't do it to your sellers. Why are we trying to do it to the buyers? Now, I need to, and I'm going to take just a couple minutes. The listing side should have done a net sheet for the seller when you took the listing and discussed the price. There should have been a clear understanding of probable sales price if they're paying compensation and the probable sales price if they don't, because it's different. The license law and the code require that we present all offers to our sellers. And as a listing agent, I have to inform my seller that I'm going to be doing that regardless of whether the buyers are asking them to pay compensation or not. So if I had a seller or one of your agents had a seller who said 0, I'm not paying any buyer brokerage compensation, and I take the listing, I still, if one of you wrote an offer on that listing, I would still have to present that offer to the seller. And I should, because the net is the important thing, not whether they will or they will not pay the compensation. The buy side, the loan officer needs to be consulted to determine if the buyer has funds to pay the compensation themselves. So if the buyer is saying they're going to pay it, you want to make sure that they've got the money to pay it. Or if they want the seller to pay it, you need to make sure, and one of the big problems we're having everywhere is the buyer agents are not including in the contract a request from the buyer to the seller for the seller to pay the compensation. So whether you use an attachment or it's a part of the contract, they have to ask for it. Now, I wanted to share with you, and I have permission from that association here in Illinois to share it. It's in their contract. And I know you're not going to be able to get it into your contract until you have a change in your contract, right, Norman? I mean, it's not going to happen until next year, which means
You
not
can,
till.
fortunately, if this is good for our members, you can add addendums
Yes.
and you can do that, which makes it flexible to incorporate this, but certainly it may be something they want to look at for permanent use moving forward.
And I'm going to send to Norman a couple of different examples of this. I just wanted to share one with you guys. In this contract, it says buyer brokerage compensation. Buyer brokerage compensation in the amount of shall be paid by seller pursuant to a seller's representation agreement. So what they're saying here is, I've got to buy us. We're asking your seller to pay the compensation. And you'll notice it is separate from closing cost credits. So I want to reiterate that our buyer brokerage compensation, according to Fannie Mae, Freddie, and FHA, all say that our compensation is not one of the IPCs. And IPC is the interested party contributions that are allowable on all 3 of those types of mortgages. And those are the closing costs that the sellers pay, repair credits, that kind of stuff. That's separate from our compensation. You don't want your compensation to be in the closing cost credit category for a variety of reasons that unfortunately we don't have a lot of time to go through, but it does affect the value of that comp for the next appraisal or CMA when we use it. And it's not a part of it. And I like what they did, and which is why I wanted to use it. They made it 2 absolutely separate statements in there so that everybody knows I can still have a closing cost credit and I can still have buyer brokerage compensation. So for example, on Fannie and Freddie, if the buyer has less than 10% down, all right, then the maximum IPC is 3%. If I put into the closing cost credits that I wanted the seller to pay 2.5% compensation, does that make sense? Then that leaves us only 0.5% for closing cost credits. That's the closing cost credits, okay? So I don't want to get into why they worded their closing cost credits because it's up to what the buyer's lender permits. That's why it says. Why they did it. I don't know why they did it that way. I'm more concerned about what they did with the buyer brokerage compensation. I've got a half a dozen different examples, Norman. I'll send them to you so you guys can take a look at them that we've collected up. Okay. So Is it coming through the listing office? If it is, then as a buyer broker, you need a brokerage compensation agreement. But I'm going to tell you, it doesn't make any difference to me as a buyer agent. What's going to happen is it needs to go into the sales contract. And the reason I say that is that the buyers want it in there. Because otherwise, I've got a buyer rep agreement that says the buyer owes me X. And I'm saying to the buyer, don't worry about it. I'm going to get it from the listing brokerage. And they look at us and go, where does it say that? Well, I have this piece of paper. Yeah, but I'm not involved in that, the buyer. Seriously, the buyers want to see it in the what? In the sales contract, so they know they're not going to sit at the closing and have to pay it. So there we go. If the seller counters by saying they will not pay the compensation, the buyer should just they should just counter back at whatever price high enough to net the seller what they're looking for and go for it. Now, it still has to appraise. So if the seller is wanting an extra, 2.5 or 3% over its fair market value because the listing agent didn't do their job and explain to the seller that's not how this works, then my buyer's probably going to walk. All right. He's not going to buy it, but because he's paying too much for it. But we're going to do a CMA and we're going to see where we end up. And then again, listing agent has no right to see the buyer rep agreement, and listing agents, don't worry about it. It's not your responsibility to verify all of that. All right. So bottom line, very quickly, focus on the bottom line, not on how much the buyer broker compensation is. And this is the part I wanted to make sure I spent at least a minute on, and I know I'm running over time. At no time should the listing agent say things like this. This is ridiculous. The buyer agent shouldn't be getting more than me. This is ridiculous. It's more than it used to be. I've never seen it this high. Shut up. It's none of your business how much I'm getting. And I'm tired of hearing listing agents whining because the buyer side's getting more than they are. Because since when is there any rule that says one side is entitled to more or less than the other side? It's that the listing brokers are so used to controlling this, they can't let go. They can't let go. So the seller and the listing agent should not be interfering in how much the buyer has agreed to pay their brokerage. They should be negotiating on price, not on compensation. If the bottom line doesn't work for the seller, they should counter back to the buyer at a price that does work, rather than saying, we'll only pay X, but we won't pay Y. Just figure out what that number is and counter back to the buyer on that number. You know what's going on here is we're still making it look like it's more about our commission than it is about the buyers and the sellers buying a house. And that was never the intention of all of this. And I think we're having more discussion about our compensation now than we had before the lawsuits. Well, maybe that's a good thing. I don't know. But bottom line is this is not a good thing. All right. There is on and I think a lot of this is also on LRA's website, right?
Yes.
You've got it. Okay. So, but if not, it's on facts.realtor, but there are a ton of really good consumer guides on there that can help you and your agents be able to explain all of this to the buyers and the sellers. So take a look at the Louisiana Realtors website and take a look at the consumer guides that are on there. There's a bunch of really good stuff on there. Finally, NAR gave us a bunch of good stuff that we can use. So thank you. I know we went a little bit longer, but it's really hard to talk about this stuff and only do it in 25 minutes. And I apologize for that, but I will get the PowerPoint to you, Norman, too. So.
Okay, just a quick follow. There was one question real quick, and then I'm going to wrap everything up because I know we've got about 15 minutes. I want to get everybody out on time. When a builder, let me pull it up. Let me go back to my. When national builders offer compensation or incentives based on the amount of transactions closed, does that mean that an agent can't receive the extra amounts?
Offer compensation? Yes, they cannot.
Okay.
And by the way, one of the other things we're teaching in the SRS class is we should stop offering bonuses to the buyer brokerages, because that is indicating that the buyer broker wasn't going to show it when I only offered them compensation. But if I offer them a $5,000 bonus, they'll show my listing. It really does look like we're doing what they accused us of. So we need to be careful. Okay.
I think that was it.
Do it? Okay.
Thank you, Lynn. What a
You're
great
welcome.
recap and giving some great insight on some of the in-field workings now that we've gotten past August 17th and are moving forward. So we appreciate everything and we look forward. Have a happy holiday, Lynn, and we'll see you in February in Lake Charles.
All right. See you then. Bye, everybody.
All right. I'm going to wrap up and it'll take me about 5 minutes, but I want to go over some new laws that just passed based on the special legislative session that the governor called approximately 3.5 weeks ago. We didn't really know at the time, but real estate was at the forefront and some good things, but also some potential negative impacts that some of the legislation that was proposed could have had on the industry. And I'll start by the governor was wanting to do some things that would bring Louisiana in line and as competitive as some of the other states in the Southeast, like Tennessee, South Carolina, Florida, Texas, meaning those states do not have a personal state income tax. So the governor, first of all, wanted to look at our state income tax, and the ultimate proposal that was signed into law on that front lowered to a flat 3% rate moving forward next year on all filers, single or joint. There will be a 3% rate on your personal state income tax. Anybody that files a single will get a $12,500 standard deduction, and joint filers will get a $25,000 standard deduction. The governor also wanted to help businesses and corporations, and so he lowered the corporate tax rate through a proposal and brought it down to about 5.5%. And it was up around almost getting to 7.58%. So that is on the personal and the corporate side. Now, when you do those things, it obviously costs money to the state. When you're losing out, when some filers were paying 5.56% on the personal income tax and the corporate rate was higher. So there was a proposal to pass a plethora, about 40 taxes, sales tax on professional services. Now, you might ask, what are professional services? Well, you think of any industry that provides a service, you do as well as realtors, doctors, lawyers, interior decorators, lawn service people, and there was about 40 of those included. The thing that we were facing was a proposal that would have placed a professional services tax on all maintenance and repair of any immovable property, meaning residential and commercial. So let's just give you an example of how that would work. If you had to replace a water heater, your clients did, or anything in the home, you obviously are billed by the company that puts that in, and they probably charge you what it costs them to pay for that equipment, because they do have to pay sales tax on purchasing that equipment and that tangible personal property. But this proposal would have also made them charge the sales tax rate on their services to put that or repair or fix a problem with your home, which obviously would have increased the cost, ultimately going down to the consumer. And as we just talked earlier today, you can't even afford insurance and other things. And with inflation, that would have increased the cost for individuals. Particularly look at the multifamily property that would have affected, that do a lot of maintenance and repair on a normal basis. Think about your commercial building. You have a boiler for $500,000 or whatever piece of equipment you're putting in, and you add a sales tax on that service, on the cost to put that in or replace or repair, you're looking at a lot of dollars for those entities as well. The good news is Louisiana Realtors stepped in, worked with our lobbying team and others, industries that were involved, and that proposal did not go forward. So they did not place any taxes on any professional services. Now, in lieu of not being able to go forward on professional services taxes, the legislature did go forward with an increase in the state portion of the sales tax, which was about 4.5%. They've raised it to 5% for 5 years, and it will go down at that end of that 5th year to 4.75%. percent on the state portion of the sales tax. Obviously, locals implement a percentage that varies statewide that you also have to pay in terms of the local sales tax. Now, does anybody remember in 2011, we were able to get into the Constitution a prohibition on any real estate transfer taxes or documentary transaction taxes on the transfer of any immovable property in the state of Louisiana. That's in the Constitution. The governor opened up Article 7 of the Constitution, and the legislature did. And there's a lot of things in Article 7, a lot of the statutory funds that they wanted to pull out and put in statute because they can't move money around with those funds and be able to pay bills if it's in the Constitution. But if it's in the statute, the legislature can then, by majority or 2/3 vote, depending on the issue, can move that money around. But again, Article 7 also had the transfer tax prohibition in it. The great news is we were able to keep the transfer tax in the Constitution. They did not touch that section whatsoever on the 2011 language that prohibits any future taxes on that. So there'll be a constitutional amendment in March that you will go to the ballot and vote on. And a lot of that deals with those funds and the other issues dealing with assessors that they pulled out of the Constitution. But just know whether that Constitution passes or that vote, if it passes in March or it fails, no matter what the outcome is, the transfer tax will be in the Constitution, either moving forward or as it currently sits today, if that amendment fails to pass the vote of the public in March. So I want to just let you know that the leadership team and all of us, we almost had to call on our entire membership to get involved, but we were able not to have to do that this go around. But our leadership stood strong, and we were able to keep particularly these services taxes off the real estate industry and the prohibition in the Constitution on the transfer tax. So just know when you're talking to your agents and members, we put this out in our e-resource recently and updated everybody on all of this. But just know your state dues dollars are well worth it in terms of not just the programs and services you get, but strictly also for the legislative representation and all of the things that go into that to make sure that what you do every day and the agents that you manage and work with on a daily basis can continue to make money without any further hindrance of government regulations or increased taxes that may harm your ability to make dollars. So I wanted to go through that with you today. And certainly if you have any questions on any of those, you can email me or obviously give me a call as well. And I'll walk you through some more in detail if you need that. Did y'all find today to be useful in terms of, I know Lynn took a little bit longer, but I wanted to make sure that she covered some of the things that are actually happening on the ground post August 17th, leading up to where we are today and what she's hearing around the country. So I want to make sure, send us a note if you thought this was good, how we can improve, things that we can do different. And we certainly will do that. And stay tuned next year. We are going to have another broker summit. The details, I know Carrie is working with staff to determine if we're going to do it in conjunction with an LR meeting like we did this past year in New Orleans, or do we have a standalone broker summit like we did 2 years ago? And we held that one in Houston and had some great speakers. It's geared directly for brokers. All of the content is broker driven. To when you leave those events, we want to make sure that you've taken away a nugget or multiple nuggets that can make you better as a broker and help your agent succeed further in whatever type of real estate you practice in. So on behalf of Cindy and the officers, I want to thank you all for being on today, and certainly follow back up with us on how you felt about today's content, the Zooms, and we're going to continue those in 2025 moving forward. So I hope everyone has a great holiday season, a happy, prosperous new year, and we look forward to seeing you in 2025. And email us if you need something or information that we can provide to you to make your jobs better as brokers as a broker member of Louisiana Realtors. So y'all take care and have a great rest of your week.